So welcome everyone. It's so great to see you all here on our virtual webinar and for our first topic event in our Spring Science Policy Certificate Series. As you note, we had changed this to a webinar format because we had so many registrants. So thank you all for being so eager to hear from Jerry, Jamie, and Renee. And with that, just to introduce the way this is going to work, we're going to have our participants give some opening remarks, and then we're just going to move into questions. So you can feel free to drop any questions you have in the Q&A, and then we will address them at the end of remarks. And with that, I'll just go ahead and introduce everyone. So Dr. Jerry Skees is the primary founder and executive director of Global Parametrics, which is an innovative firm developing new structures for disaster risk financing and providing risk transfer using a natural disaster fund supported by the British and German governments. It's really unique. I encourage you all to look it up during or after our webinar. But before then, Jerry had a career of about 35 years as a professor and a previous firm, Global Ag Risk, which was on the forefront of many important risk transfer innovations in low and middle income countries. Jerry was instrumental in developing the globally acclaimed index-based livestock insurance program in Mongolia and in providing core research on Ethiopian crop failure that led to the African Risk Capacity Facility. He and his team were key in developing the world's first regulated insurance product in Peru, paying before extreme flooding brought on by a strong El Nino, and coined forecast insurance. The focus at Global Parametrics is on longer-term business development in the disaster risk financing sector, developed for a wide range of clients. So Jerry brings a huge wealth of expertise, and we are eager to have him in the room today. And then we have two Tar Heels. We have Jamie Cummings, who is a recent graduate of the UNC with a double major in public policy and international politics. Jamie previously interned with the U.S. Climate Action Network, which aligns big green and grassroots climate NGOs from across the U.S. She has conducted independent research on youth stakeholder engagement in the UN Framework Convention on Climate Change and climate vulnerability indices, which she continues with the re-energized DR3 team. She attended COP27, where she moderated a panel with the International Chamber of Commerce and spoke at a side event on localized solutions to reduce climate-induced loss and damage for the most vulnerable. And she is currently teaching English in Elche, Spain. And then our third panelist is Rene Marker-Katz, who is a graduate student at UNC pursuing a master's degree in city and regional planning with a specialization in land use and environmental planning. Her graduate degree will be accompanied by a certificate in natural hazards resilience offered through the Department of City and Regional Planning. She is currently working as a research associate with the UNC Water Institute Re-Energized DR3 team to strengthen the relationship between governance and private-public entities to better support vulnerable community groups through climate-related disasters. So with that, I will turn it over to Dr. Skees.
Oh, thank you for the kind introduction, and it's great to be here. I'm sorry I missed the event earlier in the fall. I was able to make one last year, as you may remember. So can you see the screen? And I'm trying to share it now. This is the way that I wanted to start, is just to give the contrast between developed and emerging economies, because the wherewithal to actually respond when there is a disaster is pretty fundamental to public policy, right? And in the case of developed countries, they have large physical resources, they can respond to disaster. And in fact, if you go to the economic literature, it will always say the governments should self-insure for disasters. Now, the lens that work was done for was countries that had the wherewithal to be responsive. And as you might expect, when you have a disaster in a developed country, you're not going to see disruptions in the GNP. Typically, it'd be very, very minor. By contrast, when you're talking about emerging economies, in particular the lowest income countries, those fiscal resources are missing, and disasters are going to impact growth in GDP and society in very horrible ways, frankly. The other contrast that there's a lot more that could be said about both of those, but the other contrast is to think about financial markets. In the United States, we have very well developed markets, insurance, banking markets, well regulated. There's a lot of trust in the community. If you know you're going to have savings, you feel confident that is federally insured with FDCI, and you're going to get your money back if there's any problem with the bank. By contrast, that doesn't happen in a lot of emerging economies. You don't have the trust, you don't have the same regulatory environment. If we go to the next point about developed countries have long history of property and casualty insurance. Fire insurance came after the cow kicked over the lantern in Chicago, and people realized that you had to reinforce and have fire brigades, and then fire insurance emerged only after the insurance companies had confidence that there was a way to put the fire out and you weren't going to burn the whole city of Chicago. By contrast, there's limited or no history of property and casualty insurance in a lot of the emerging economies. So what this comes to is, in the developed world, there's established legal and regulatory environment that really reinforces the financial markets. You have mortgage companies that require that you have earthquake insurance, hurricane insurance, tornado insurance if it's in Kentucky. And you've got that requirement in your contract with a mortgage company. And you get that reinforcement that I spoke to a minute ago, because building codes are trying to reinforce that you're building properly for the risk that you are exposed to in the geography of note. By contrast, you don't have that. You have very nascent legal and regulatory environment that support these financial markets in emerging economies. Again, the insurance market is a complicated thing to happen. It took hundreds of years for it to develop in the United States, for example. And then, of course, we all know that there's a lot of weak building codes and ultimately poor resiliency for society because of these kind of institutional problems. We were founded to address some of the key issues that emerged because of what I just described. And in this example, 93% of the people living in extreme poverty are in political, fragile, or environmentally vulnerable countries. And that really speaks to what you just saw. And the next one even speaks louder. 94% of the losses in these countries that were on the right-hand side of that are not eligible for insurance, and they're uninsured. Now, global parametrics was meant to address this issue, and we hope we are. We're supported by the British and the German governments, and there's more detail there. But I wanted to just kind of go back to disaster risk financing 101, because that's what I really work on. Disaster risk financing is about how to pay, how to plan to pay for disasters so that you're not paying with people's lives. Financing that promotes and targets preventive preparedness and response to the crisis become the integration that's needed to build resiliency. Now, my friends at the Center of Disaster Protection, I'm stealing from them with exactly their wording, and I've done the same here. So what this means is the context is the underlying risk, trying to understand what those are, and developing disaster risk financing based approaches. And the money in part is instruments that place the supply of money at the right time. And the faster, the better, right? The faster you can respond with cash into the disaster, the better. The money out is plans for actually how to distribute those payments to have the biggest impact, right? And project management processes can make all these considerations. And I think this is really the course that you're taking, is thinking about these various dimensions. What does this mean in terms of instruments that are used for disaster risk financing? Of course, there's ex ante, which we hope the world will start to adopt. But the typical part on the right-hand side are the ex post, where you only respond after the disaster. And it's a much weaker response if you do it after disaster. You can't really plan for where the resources are going to come from. So you're really putting the begging bowl front and center if you depend on ex post responses. In the ex ante instrument range, you've got the market, the capital markets with catastrophe bonds. You've got parametric insurance, which we do. You've got traditional insurance, reinsurance. You've got risk pools. You have contingent credit. You have reserve funds. You have budget allocation. Budget allocation that comes from governments and from either, it can be local and regional governments as well as national governments. Over here, you'll see that it's budget reallocation. And that speaks to the point I made earlier about the fiscal resources. And what this means is that when there is a disaster and you're in emerging economies, you're reallocating budget, meaning that you're taking away from investments that you might be making for important infrastructure that will support growth. So what's really happening in the ex post world is you're getting discretionary post-disaster relief. It can come from various sources, humanitarian aid, it can come from crisis response grants, loans from development banks. The World Bank does this CAT DDO, that's a contingent credit instrument. And then you have, once you have the disaster and you're financing all this, you may see tax increases. So you can see this downward spiral that occurs if you're really planning disasters on this case-by-case ex post basis. Now, what I wanted to comment on here is this is a very rich slide because it also starts to give us a context for thinking about who should pay and what's the role of the government, what's the role of the private sector. And in every one of these boxes, we can come back to this slide, I think, and review that as questions emerge. So I'm not going to spend too much more time on that piece, other than to point out that as you saw in COP27, a lot of discussions about the developed world paying for what's happening with climate change into emerging economies where they haven't been the contributor. And there's this whole penchant to actually compensate. And some of this comes with direct premium subsidies, which opens up a whole lot of conversation that we should have in terms of what signals are being sent, what incentives go with that. So there's a context, just to come back to global parametrics to see where we fit in this whole thing. Now that we've laid a little framework here, we have that leading expertise that provides parametric solutions for extreme weather, for natural catastrophe events like earthquakes, hurricanes, even volcanoes. And the parametrics, what does it mean? Parametric solutions are scientifically based, and they're event-based triggers that use the exposure, which is one dimension of risk, is how much do you have exposed, and the history, that the time series of risk of the hazard in order to structure something meaningful. We have risk capital as well. So we're really meant to catalyze solutions to the benefit of the risk transfer market. And we're doing that. I'm really happy that we've got Hanover Re, as you may have seen earlier, backing us up, and other global reinsurers. So we're trying to structure and provide financing that will build stronger businesses, markets, and communities in the context of what we're really framing here. Here's a graphic that I use often to explain how this works. It's an event-based, that's where the science comes in. And it's ranked, once you structure these indexes, these parametric indexes, you're ranking it by the severity of the event. And the idea is that with higher ranked, less frequent events, you should require more financing. And then you get into the idea that a statistical rank can be used to pay from internal reserves, from contingent credit, from risk transfer. The benefit here is that you get that cash fast. Within 10 days of the event, we will pay. And it's also really presented in a way that it represents business interruption and balance sheet protection. Here's some of the ideas of the flow of capital and how we can protect societies in these emerging economies. small, medium enterprise, financial institutions. We've got some really great transactions, agribusinesses, renewable energy, nature-based solutions. We're also in discussions to protect governments as well. So there's the micro level, which we don't do, but we back it up with reinsurance. We do the meso level, which is here, and we're now offering to governments as well. So just to close out in terms of what we do, and hopefully it all connects with some of the leading comments, we've done these kind of transactions. We've got this nature-based solution that's really cool. It's protecting the reef in the Yucatan Peninsula. It actually paid in 2020. We've got resilient credit programs that support recovery lending so that banks and financial institutions will go in and make loans when there is a disaster rather than running away. And we're reverse engineering that, by the way, into the United States. I did some work with Wharton last year. We developed a paper, happy to share that says, you know, we can do this in the United States as well with community development financial institutions, which their purpose is to work with the poor and vulnerable in the United States, because we certainly have a lot of poor and vulnerable that face some of the same issues I described above. And we also do the forecast-based financing, similar to what we did in Peru with the El Nino forecast-based financing. We're doing it with tropical cyclone. We have several agricultural applications, and we're on the verge of signing a contract with the World Bank to support climate-smart agriculture in the DRC. Can you imagine any insurance company that would be willing to step forward and say, we're going to protect a lot of risk in the Congo? So that was a bit of our aspiration, is that we would create the scientific basis with open source data so that the market would be willing to go into the most remote places on the planet. So I hope that all ties together and sets a context for some lively discussion, lively questions. Thank you.
Great, thank you, Jerry. And I do have to say that Jerry's work was a little bit of an inspiration of where I'm taking my PhD shot. So I have to give a shout out to Little Parametrics for that. But let's kind of switch gears. We got, I would say, very academic and business perspective. So if anyone in the room is doing a business degree and is interested in environmental sciences, Jerry is your inspiration. But we also have a slightly different perspective from Jamie and then Rene. So I'll turn it over to them.
Thanks, Rosa. And thanks, Dr. Skees. That was a great introduction and quite related, definitely, to what I wanted to dig a little bit deeper into. You discussed a bit about the conversation happening about responsibility, who's responsible for these natural disasters, responsible for paying in how we react and recover and are resilient from them. And so I wanted to talk a little bit more about that because I was lucky to be able to attend COP27 this November and did a lot of research about that, did a lot of work surrounding that. So loss and damage, if you all were tuned in to COP27, was a huge topic. I would say a central theme, a central topic. So hopefully many of you have heard of loss and damage. If this were live, I'd get a show of hands, but just a quick overview would be that it's really about environmental justice and the idea that there are historical emitters, like from the developed economies, as Dr. Skees said, who have contributed the most to global emissions and therefore global warming and therefore climate change and natural disasters. And those who suffer the most are those who have contributed the least to these problems. So the economies in the global south, as we said. So those are the emerging economies. And the question is how, or I guess the debate was at COP27, how are these historical emitters going to be held accountable for the damages and losses that they have caused and that these people in emerging economies are suffering from. So then at COP, we saw in the lead up, many people, many of my closest colleagues even believed that there was no chance that a funding mechanism would be passed related to loss and damage, because it's a very lofty idea, a lofty goal to hold these historical emitters who have power and money in the global system accountable. And especially with the United States, we were the largest blocker of this, partially for liability concerns, because we are the largest emitter historically. But at COP27, really what happened was we witnessed a huge unification of civil society across the board in a push for this fight for a loss and damage fund and finance mechanism, through marches, through social media campaigns, and really relentless leadership from government officials in the global South, especially. And then the outcome was a mechanism actually was established in the text, and details are, of course, going to be worked out in the coming years. And governments will have to deliver on this initial text if we want to see true outcomes. But this was a huge win, I would say, for folks in the environmental justice sector and folks concerned about resilience and about recovery from natural disasters, especially in the global South. And yeah, so just to speak a little bit more about my role as well, as Rosa said, I was a former intern with US Climate Action Network, which is at the United States node of Climate Action Network International, focused on frontline communities here in the United States. So those are communities, especially in the Southeast, who perhaps have been pushed off their land originally or are redlined into districts that are especially vulnerable to climate disasters. And they work with grassroots activists to really promote their stories and connect this fight from the global South internationally with the US South, that fight for environmental justice. And that local to global connection was really witnessed at COP. And I would say both aspects are really critical, because we saw momentum in the international space that was unified to fight for this loss and damage funding at COP27, but also the local piece of that is really critical, because we can't lose sight of those people who are on the front lines facing the most acute disasters, today, right now, talking about wildfires and droughts and now intense rains in California, for example. And yeah, I guess listening to every story in the local community is really critical to ensure that these folks are resilient, because resiliency changes and reactions to disaster changes in every local community, because everyone's different and there's not one size fits all response. So yeah, that's a little bit more about my participation at COP27 and about answering the question of who's responsible. And the last note that I'll say is Dr. Skees also mentioned the role of insurance companies. And that's interesting as well, because as Rosa said, we helped host an International Chamber of Commerce discussion on the role of insurance in loss and damage and protecting vulnerable communities responding to natural disasters. And so I would just say there's a couple different perspectives. Some argue that insurance, including from the private sector, it comes up short when addressing loss and damage because it leaves out the idea of those historical global emitters, because all parties would be required to pay into an insurance fund, not just the most vulnerable and the largest emitters historically. And then also people fear that governments fall back too heavily on the private sector and fail to take action themselves by signing on to a loss and damage finance facility, for example, or working more in their national spaces on national policy to deal with these natural disasters. So that's a bit of a take on insurance, but there's also room for growth there, and perhaps another emerging response to natural disasters. And so yeah, I'll pass it back to you, Rosa, and thanks everyone for coming today to have this discussion.
Great. Thank you, Jamie. That was excellent. I'll actually just pass it straight to Rene.
Perfect. Thank you so much. I hope that everyone can see me okay. I'm having some camera issues, so if it glitches again, I'll just go ahead and turn it off as it's pretty distracting. Jerry and Jamie, you both had some really great points about loss and damage and who should be responsible for that. I wanted to talk a little bit about the work that we are doing in DR3. So Reenergize DR3 is an NGO financed through the Belmont Forum through the UNC Water Institute. So our team pretty much is trying to bridge the gap between planning and practice, or policy and practice put together. And one of the projects, I also was able to attend COP27. And one of the projects that I'm working on is creating a gender-based vulnerability index for women, because through our research, we realized that there is no internationally recognized women's vulnerability index, the same way that there is one for children and other vulnerable groups. So that's one of the things that we're trying to put together. And that ties into loss and damage, because in order to know where the money needs to be financed through, we need to know who the most vulnerable groups are and who's being hit the hardest when disaster strikes in any given area. So what Jerry touched on about emerging and developed countries is really important, because as far as an accessibility issue for the amount of data that we're able to gather, developed countries might have that data on hand versus developing countries or emerging countries might not have access or the resources to be able to pull all of that together. There are some organizations such as the World Health Organization, the World Bank. They do tend to put sort of substantial data sets together that help to kind of narrow who these vulnerable groups are. And so part of what we're doing at DR3 is we're not only looking at who the vulnerable groups are, but we're looking at potential insurance programs that might be beneficial for emerging and developed countries. And I know that Jamie's work that she did at COP, Experience in Loss and Damage, it's been like she had touched on at COP27, it being on the docket meant that it was a very new concept, but not for the people who have been experiencing devastation through climate-related disaster for so long. So they've been asking for reparations of sorts for a really long time, and it's finally being put on the forefront of policymakers' minds. So I also wanted to talk about the importance of how to bridge that gap between research and policy, and how to make research more accessible to policymakers, because right now there seems to be a disconnect between the ways that policymakers navigate through these conversations and the data that's available to them, and also how to get funding for the research. So I think that one of the other things that one of my colleagues is working on is the use of social media as a data informant. So for instance, when a disaster strikes in a specific area, people are using Twitter, whether it be in a developed country or even in developing and emerging countries. These people tend to have access to the internet, and they also have a cell phone. So that can help inform emergency services as well as support emergency services so that they're able to get to the location faster, as well as that can become sort of a data set in itself as where is disaster happening, where is it located, how long is it taking for emergency services to get there, etc. But again, it is creating an accessibility issue to not only collect that data and store it in an organized way, but also the accessibility issue of who has access to report on that data. Is their internet glitchy? Is there even enough emergency service vehicles or staffing in that area or in that country to be able to get to the disaster in a sufficient amount of time? So that's some of the stuff that Re-Energize DR3 is doing. We're kind of, I wouldn't say all over the place, but we're really just trying to create a comprehensive view on how to bridge policy and bring it to practice and make that research accessible for both policymakers and just those who want to get involved. Another question that we had in before we started the panel was about how to get involved. Jamie and I just wrote a blog that will be posted on Thursday in the International Science Council about ways for young people to get involved at COP28 and other COP conferences. So if you are interested in that, I can put my either my email or probably my LinkedIn would be easier in the chat, so that you can keep an eye out for that. It should be posted in a couple of days so that you can, if you're interested, you can get involved and start looking into these organizations that are doing the good work at these COP conferences.
Awesome, thank you. And yes, if you just drop your whatever means of communication you want to be found by, drop it in the chat, and that way our participants can contact you after the panel. But with that, I was gonna try to invent some of my own questions, but I see we have so many already in the Q&A box, and we have a few that were submitted with the registrations. So I think I'll just dive into participant questions. And I want to take two that are a little bit more broad to start. The first one being, given that natural disasters are happening more frequently and are causing more damage, what are some local level solutions that have been proposed? Because I think we talked a lot about some of the larger scale solutions out there, ideas. And are lawmakers willing to spend money on preventative measures, or are they only focused on reconstruction efforts? And this we sort of touched upon. So whoever would like to start, the floor is open for anyone.
Well, I can speak up if my colleagues don't want to start. So the mitigation, that's a very important part of the developmental community. The World Bank and the disaster risk, or the DFIs, the disaster financial institutions like the IFC, FMO, KFW, this is a whole lot of what they try to do. Is they try to reinforce infrastructure and other activity. Now, what they haven't been able to do is to do it with the lens of understanding how climate change and history may affect the need to build more resilient infrastructure. But by the way, we have that problem in the United States as well, because if you look at how we build flood maps, we're always looking back rather than looking forward, and things are going to be different looking forward because we do have more intense rainfall and more frequency of intense rainfall. So there is a super strong need for the scientific community to work with the engineering community so that they can get the best view of what the risk exposure is of different segments of society. So the mitigation part should always be front and center, in my opinion. It reinforces what you can do with the financing part. The ex post or the ex ante financing is certainly going to be driven, the needs are going to be driven by the the resiliency of the systems, whether it be a women's group that works in India, which we're working with. They're worried about heat waves. We've developed a financing mechanism for heat waves that will be disruptive to their ability to be productive. As you might imagine, you just can't work when it gets super, super hot. And even if it extends into the nighttime, you're without income for a few weeks in some situations like that. So in my world, yes, those things, if you're not careful about trying to think about those reinforcing mechanisms, you're going to have a problem. Now, the other thing we would all like to see, I mean, not all of us, obviously, because it's a very controversial topic, but I share the concerns about the fact that the developed world is not as serious as they should be in trying to provide the right compensating mechanisms for the climate change that we've created that impacts the poor and vulnerable everywhere, not just in emerging economies, right? So be careful though, because if you do the wrong things, you're not reinforcing building resiliency. So for example, if you say, I think these small farmers in Ethiopia need 100% subsidy for crop insurance, just think about what's happening there, because these guys are going to have losses frequently, and they're going to be happy enough that they keep the same farming practices. That's not building resiliency. That's a tough one. That's an economist speaking. Now, I used to teach development economics. I'm a policy economist by trade. I taught public policy, I taught development economics. So, if you want to really put a heartburn in this audience, which I like to tell my students, if I don't make you uncomfortable with every lecture, then you're not thinking. Think about, how do you do these compensation mechanisms? Where should you focus? If you do them wrong, you're not helping build resiliency. So there's a real careful public policy debate and action steps that need to be considered here. I think in the COP27, the two colleagues here probably heard about the Global Shield. The Germans are leading the Global Shield, which will provide some type of support, primarily premium support for emerging economies. I'm advising them about what that might look like and where you can do it in a way that's least disruptive to the reinforcement that's needed to build resiliency, but it's not trivial stuff.
And to that, then, just to jump in before Jamie and Rene also answer, this kind of addresses the who actually receives the funding question, because it truly depends. It could be that super smallholder, a small scale farmer, or it could be the whole country, right, Jerry? It's not one size fits all.
Absolutely.
Jamie, Rene, any additional comments?
I think that was a really solid answer. I'll just add really more of a broader overview. Within the UNFCCC, there's kind of the question was, is there funding for mitigation efforts as well, rather than just a reaction to the natural disaster? And there's kind of three main pillars that people tend to think about: mitigation, adaptation, and now this loss and damage piece has been added to those pillars. And so the adaptation and mitigation pieces are sort of what comes before. So yes, to answer the question, absolutely, governments are considering, policymakers are thinking about mitigation funding and ways to mitigate before a disaster actually happens. But the environmental justice that was fight that was kind of happening at COP was more about, okay, you've been talking about mitigation and adaptation funding for years and years, still not delivering. And now these events are occurring, losses and damages are real, they're happening now, flooding in Pakistan, just as an example, recently in the past year. And so that was kind of a response and has now been added as kind of the third pillar of thought to the UNFCCC process. So just to add that.
Jamie,
can I help?
sorry, go ahead.
One thing. loss and damage got a lot of emphasis in this COP, but it's not new. Okay, it's been.
Oh, no, absolutely.
Yeah, it's been,
Yeah. Since the 90s with small island states.
Yeah.
Absolutely. Sorry, I didn't mean to say that.
Well, Jerry's been working on it for a very long time. So
the fact that it's been around so long speaks volumes for the fact that how hard it's been to get the international community to pay proper attention. And I watch COP with a little bit of a different lens since I am the old guy. I'm sometimes a little more cynical maybe than you would have been sitting there enthused about what you were hearing. I just want to make sure the audience understands that you can have these great meetings, you can have a lot of people come together, they get really good feelings about the meeting, but the follow-up, and I've been to some COPs through the years, and the follow-up is always what you should be looking at, man. Hopefully they'll do a better job.
let's hope so. And just to pull another quick question, Jamie, someone was asking, how do you define environmental justice? Because you brought that up a couple times, and I think it's been an underlying thread here, but for folks that don't have a clear idea, what is it, and is the government typically involved with it? Is it usually nonprofits? Should there be a distinction in who is involved?
Oh, am I frozen? Okay, I think I'm back. Sorry. So yeah, that's a great question. I think environmental justice can be defined in a lot of ways. It's a really broad topic. But for me, environmental justice over the last few years has, in the United States especially, meant connecting racial justice to environmental justice, to the environmental movement, and looking at communities who are facing environmental impacts of climate change, and maybe don't have the resources or don't have the infrastructure, and have been really marginalized. And now this is come together with the new new environmental impacts. And more broadly, internationally, I think it goes back to the fight for having a just way to, I guess, ameliorate or address the emissions caused by historical emitters who also are historical colonizers. They have had and
You're breaking up a little bit, Jimmy. The international connections can be a little bit hard. Jamie, I'm going to stop your video if you want to try talking again. It's not working. So maybe you can finish answering that question. Oh, are you back?
I think so.
Okay.
I'll stop there. If anyone else wants to hop in with their definition, would love to hear it too, because it's a broad topic. So.
Okay, and you can also continue answering that question in the chat if you would like to. Rene, Jerry.
I see a lot of questions coming up about acronyms and confusion about acronyms. And I was even confused as to what COP stood for. So I Googled it. It's the Conference of the Parties. And in this instance, the parties are international representatives from different countries. And it's facilitated by under the framework of the United Nations Convention on Climate Change. So that might help people get a context. And now that I know what COP stands for, the Conference of the Parties, I think it's helpful for me as well. But there's other acronyms probably along the way here. Environmental justice, yeah, I think Jamie did a pretty good job framing it in terms of how it can be interpreted very differently by the parties, for sure, as it has been, right? What does it mean, and what are the sensitivities around that? Obviously, the self-interest of different countries around the table will dominate their view about what environmental justice does mean in the context of the COPs. So I think the answer there is pretty contextual as well, sure.
So I think I'm going to try to tie together a few different questions next, just to try to maximize how many we can address. Starting with the idea of what are maybe some more specific examples of environmental financial risks, and shameless plug, you should check out the Center on Financial Risk and Environmental Systems, which I am a part of here at UNC. This is our bread and butter. But could you all talk about some more examples? I know we mentioned agriculture a little bit, and flood maps, and how do insurance companies quantify that risk? And then maybe we could become a little bit more specific in thinking about how the mindset around environmental financial risk has been changing, both just mindset wise, but also in practice, and think about the example of flooding in small island states. I know that question had a few different layers.
Well, I guess maybe you can help fill in some gaps here, Rosa, since your center has been working on definitions. But my lens for thinking about this is the types of exposures that come from hazards like drought, flooding events, earthquakes, tropical cyclones, heat waves. There's a lot of financial risk that's tied to those business interruptions. And I do want to put a plug in for language, because loss and damage is meant to capture some things, but loss and damage is very much a developed country lens as well, because loss and damage really speaks more to actual property being destroyed and lost, assets being lost. But if you think about emerging economies, the economic wherewithal of small households, they don't own a lot of assets. They're doing small trade that doesn't involve many assets. So it's really the business interruption that comes, and all the disruption in the trade that they're involved in. Their livelihoods are completely disrupted when there is a natural disaster. So that's part of it. But the other thing I wouldn't want you to forget is it's not just human species and people, but it's also our natural environment, the forest fires, the tropical cyclones that destroy the frequency of these events. Life in Panama, and there was this institute that does all down there. And he started telling me that El Nino was really tough on Panama with the wildlife. So, these events, the frequency of these events affect all mammals, all species on the planet. So maybe that's a broader definition of environmental risk as well.
Jerry, that's a really good point. And I just threw it in the chat as well about the concept through financing loss and damage of more assets equals more loss and damage. But there's really no funding mechanism for quantifying things like human life and sentimental items. And there's so many different value systems that other cultures hold that really aren't accounted for in this funding mechanism model that we currently have. So that's a really excellent point that you brought up.
And to that end, we had a question about detaching disaster relief from markets and business. I think probably those non-quantifiable assets or elements are where the markets really tend to struggle. So is it better to detach the two? Are there alternatives that people are relying on already that seem to be working? And I know there is just the public sector support avenue for it that's subsidized, but to expand on it a little bit.
Yeah, Rosa, you kind of just said what I was going to hop in and say, that that's sort of the argument that many people have been making kind of against the fallback on the private sector, is that many say, you know, the business and markets aren't going to work for some of these most serious natural disasters and climate-induced events. And so there has to be a separation and a responsibility then for the public sector to step in and fill that gap when those fail. So that's part of the conversation.
Let me help us all think about some issues of political economy here. No matter what system we engineer, the poor and vulnerable are still going to have the least voice. Okay, let's just face up to that. So if you're talking about the private sector saving the day, the poor and vulnerable are going to have the least voice. If you're talking about the government saving the day, the poor and vulnerable are going to have the least voice, right? So how do you try to manage that with the kind of information that can be created by the scientific community and the type of incentives that you can put in place so that people don't neglect the poor and vulnerable, who again suffer the most, right? When there is a natural disaster. That's the unanswered question, I think, for all of us, is how do you get there? So with this, you know, where we've been working with the START network before, the START network is a network of humanitarian organizations. We were working with them with insurance lens to help identify the severity of the event so that they would actually deploy the resources based on the severity of the resource of the event. So if you think about the call for humanitarian response, be it from the international community or from the government to come in and do a response action, how do you finance that? It becomes a big question, right? If you use the begging bowl, where you make the appeal post-disaster, you've got a lot of uncertainty as to whether it's going to be enough and under what circumstances. Sometimes it might be too much, sometimes it's not enough. So for my world, if you could actually structure it so that you know the return periods and you can have those different mechanisms for financing it, with the NGO community involved as well, who have a better way to reach the poor and vulnerable, maybe. There's some effort there that I think is really worth your time to kind of unpack and puzzle through if you're trying to bore into environmental justice issues and how you actually organize disaster assistance response. And then let's don't forget, you know, if you just to take an extreme and maybe controversial point of view here, if you realize that all those houses on the beaches of North Carolina are in harm's way, but somebody helps come along and rebuild the house for that homeowner, you do appreciate my point here, that that's the disaster response for the rich, and you're reinforcing a really bad behavior. We got the same problem in the canyons of California, where people build houses in harm's way for fires. And all this is repeated over and over again. The population of the United States is concentrated around the coast of the United States. Anyway, enough said. Thank you.
Unless there's anything quick to add, I want to do one final question and 30-second answers because we are running out of time. But some of our pre-submitted questions are about other fields that maybe we don't traditionally associate with loss and damages. And Rene, maybe you have some comments on this since you look at vulnerability indices that are gender-based. but thinking about the role of public health or intersections with public health. I'm in the School of Public Health here at UNC, as well as legal elements. What can a lawyer do if they're interested in this topic? And I suspect this one will have much more to do with structuring contracts. But what are your all's takes? 30 seconds, and then we're going to wrap up.
I'll go first. Great question, Rosa. So I'm in the planning department at UNC, and of course we are experiencing new issues of zoning from 60 years ago, 60 plus. So as from a lawyer's perspective, understanding the zoning laws in your area, and there are new creative ways that you can either take away those regulations or you can work within those regulations. So just with that quick amount of time I have, anyone interested in law and issues of gentrification, definitely take a look at zoning practices in a current, like a specific municipality. That would be a good way to help mitigate loss and damage, as well as figure out where you're developing in floodplains, et cetera, to make sure that people are not becoming more vulnerable in the future.
Yeah, I would hop in and say that one thing UNC DR3, Re-Energized DR3 has been focusing a lot on is UNDRR, which is the UN Office for Disaster Risk and Resiliency. And I guess within the UN, there's so many different sectors that deal with public health, with children's vulnerability, with the climate, and how these all tie together is quite interesting. And so we often talk about COPs because they get a lot of media attention and all these big parties are coming together. But there's conferences throughout the whole year that tie together climate with many other issues such as public health. So I would say just a plug for UNDRR and to look into other UN systems and how they're all interconnected.
So in my world, I was trained as an institutional economist at Michigan State University. So what I always told my students is there are no free markets. Markets are constructs of man, and markets revolve around legal and regulatory environment. If you don't have the institutional setting, you're gonna have a fight. Somebody bigger and uglier than you is gonna come along and take what you've got, right? So absolutely, if you as a policy person don't understand, can't communicate to lawyers about legal and regulatory issues that really set the stage for what you're trying to accomplish, you will not be successful. So I'll leave it that way.
Awesome. Well, we're already over time. I think we could keep going for another hour or two because this topic is just bottomless. But a round of applause for our panelists. Thank you so much. And again, I just want to, before we wrap up, thank our co-sponsors. So I'm here as Vice President of the Science Policy and Advocacy Group at UNC. This is part of our Science Policy Certificate Series. So if you are interested in learning more about all of these topics and the intersection between your research, whether it's natural disasters or women's health, bioethics, please check out our next events, including the one on February 7th on writing policy briefs. And yes, there are so many resources at UNC for folks interested in doing this work. DR3, again, shameless plug, I'm doing my PhD within the Center of Financial Risk and Environmental Systems. So check us out also. And feel free to reach out to any of us with further questions. I know Rene dropped her info in the chat, but I'm sure Jerry and Jamie would also be happy to connect after this panel. And with that, thank you all. I'm going to stop the recording.